Alrighty, what is going on, everybody? Welcome back to another quick XRP update. We have a lot to cover starting off the week, considering that we have a bunch of fundamentals in the coming days ahead that are going to determine market sentiment. I do apologize in advance if I start hacking out a lung. I am feeling very under the weather right now, so I'm going to make an attempt to not have to edit today's video breakdown and just go through it all. So give me a second if I need one to get some water, and we'll continue to carry through. We're going to go over some key levels to be mindful of and pay attention to on XRP. As always, keeping you guys in the loop with accurate dark pool and delta information. We're going to also take a look at the weekly report, go over the outlook, what we need to see for a bullish environment, bearish environment, and just make sure everybody that is following us here at CYPRX is on the same page as to what we need to be mindful of in the coming days ahead in terms of market sentiments. So starting off here, I said to you all in this post, quick XRP update. Market sentiment has kicked off the week with a risk-off tone, following the weekend conflict with Iran and the U.S. Oil prices have spiked, leading to further uncertainty on the path for monetary policy from the Federal Reserve and inflation outlook with key inflation data and Fed speakers this week ahead. At time of writing, heading into the London and New York session trading hours, sellers over the weekend trapped buyers at the $1.11 dark pool and have now broken below the $0.07943. If buyers cannot reclaim this threshold, turn it into support, sellers will likely make an attempt to break below $1.03, which is where we're currently headed at time of recording today's video breakdown. Be prepared for a much deeper drop in price if buyers do not defend $1.03. The next dark pools come in at 91 to 68 cents. If buyers can defend against sellers and reclaim $0.07943, we need to see them break bullish back above $1.16 if we want to see a meaningful recovery on XRP's price. So before we get into the technical analysis aspect, first we're going to cover the fundamentals. Again, I do apologize in advance. I'm literally struggling. My throat chakra is completely distraught right now. But today, July 13th, we had the first Fed speaker this week come out relatively hawkish. Fed Governor Christopher Waller warned that another hot core inflation reading could force policymakers to consider raising interest rates relatively soon. While the U.S. economy remains resilient, persistent price pressures from tariffs, energy, and AI infrastructure are raising concerns. Tuesday's inflation data could be decisive. Not could be, it will be decisive. So with that being said, we're going to head over here to our CYPRX private community report. We're going to thoroughly read through the market sentiment and analysis that we delivered to the private community members at the beginning of the week. You can actually see in real time some of the community members are still reading this. I'm not going to give you guys all the insights, but we are going to take a look into our inflationary outlook. So I said here, of course, outside of geopolitics, this week's primary focus shifts directly toward inflation data. Tuesday's CPI report and Wednesday's PPI report will likely become the most important scheduled economic releases before the July Federal Reserve meeting. Now, we are going to cover some updated dark pools and levels to be mindful of on XRP, so just stick around for that. We'll get to that here in just 1 second. Right now, the consensus currently expects headline CPI to decline 0.1% month over month, largely because gasoline prices fell sharply following the collapse in oil prices after the temporary reopening of the Strait of Hormuz during June. Annual headline inflation is expected to ease from 4.2% towards approximately 3.9%. At first glance, this sounds extremely bullish. However, investors need to look beyond the headline number. The Federal Reserve cares far more about core CPI, which excludes food and energy due to their short-term volatility. Core inflation is expected to increase 0.3% month over month, while the annual core CPI reading is expected to remain around 2.9%, showing inflation underneath the surface continues to be sticky and troublesome. This creates what could become a very confusing narrative. Financial media headlines may celebrate a softer headline CPI reading. Meanwhile, the Federal Reserve may remain cautious because core inflation refuses to move lower. That distinction will likely determine how markets react after the initial headlines fade. So why core inflation matters more than headline inflation? Again, these reports are written for our private community members if you all want access to them before the moves play out in the market, before the headlines drop, to stay in the loop with real live market conditions. Head over to CYPRXtrading.com. We'd love to have you on the team, always educating our members properly, building a foundation for them to stay intact with the current market sentiment. Now, the decline in gasoline prices is largely the result of a temporary geopolitical development rather than lasting economic improvement. Oil prices collapsed after tensions temporarily eased during June. Those lower energy costs naturally reduce headline inflation. However, the Fed understands energy prices can reverse very quickly. Instead, policymakers focus on whether underlying inflation across housing, services, and consumer spending continues slowing. Unfortunately, that trend remains considerably more stubborn. This explains why several Federal Reserve officials continue warning they are not prepared to declare victory against inflation. And you can see the date on this. So this is from July 12th. We put this out a day in advance to our private community members. Now we look at what Fed speakers are saying. Today, Chair Waller mentioned this exact thing. Others have acknowledged improving shelter inflation and softer labor markets. That internal disagreement makes this week's inflation data even more important. Excuse me, water break. So we have multiple Fed speakers throughout the entirety of this week. Monday all the way through Thursday, we have scattered Fed speakers. Fed Chair Kevin Warsh also testifies Tuesday and Wednesday, while several regional Fed presidents also speak before and after the inflation reports. Markets will carefully examine whether policymakers become more confident inflation is moving lower or whether they continue emphasizing the possibility that rates may need to remain elevated for a prolonged period of time, or even rate hikes. Because the Federal Reserve recently adopted a slightly less aggressive tone during the latest meeting in minutes, while remaining fully data dependent, this week's economic data has the potential to materially shift expectations surrounding future monetary policy. Alongside macroeconomic data, we also have major earnings reports from multiple major U.S. banks, including JP Morgan, Bank of America, Goldman Sachs, Citigroup, Wells Fargo, just to begin reporting this week. So, what would we bullish for risk assets? What would we be looking for to see continued risk sentiment or recovery from the current market sentiment? Where right now, at time of recording, the total cryptocurrency market cap is down about $52 billion on the day. XRP is trading well below the dark pool at $1.07, hovering briefly above the $0.03799 at about $1.05. What would we need to see a formal market recovery? Here is our personal outlook from our private report. First, we would need to see continued diplomatic progress between Washington and Tehran, along with Iran, without further disruption to commercial shipping through the Strait of Hormuz. Second, headline inflation meeting or falling below expectations, while core CPI either matches consensus or surprises slightly lower, reducing concerns that inflation is becoming entrenched again, which would decrease the odds of Fed rate hikes later this year. The third, Federal Reserve speakers maintaining last week's data-dependent stance rather than suggesting any additional tightening has become increasingly likely. And fourth, strong earnings from banking sector giants demonstrating resilient consumer activity and stable financial conditions. If these factors combine, investors will likely become increasingly comfortable pricing lower long-term inflation risk while reducing expectations for future rate hikes. That environment would naturally support technology stocks and cryptocurrencies alike, along with other growth assets. Technically, a successful break above the $2.21 trillion level, if we could see the total crypto market reclaim that level, that would significantly strengthen the current bullish thesis, or at least the long-term bullish thesis. I wouldn't say current, because right now the market is definitely risk off. Now, what on the inverse side would pressure crypto and NASDAQ, we can pretty much just flip these things on its head and go about it. The largest and most immediate threat remains another meaningful escalation throughout the Middle East that materially disrupts oil exports or causes prolonged closure of the Strait of Hormuz. Of course, that would continue to weigh on risk sentiment and drop risk asset prices, particularly like XRP, because we focused on that in our analysis here on the YouTube channel, down into lower levels. Any sustained interruption to roughly 20% of the global oil supply would almost certainly send crude prices sharply higher, reigniting inflation concerns and reducing expectations for future monetary policy easing. Secondly, if core CPI and PPI remain elevated, stubborn, sticky, and troublesome, or surprises above expectations while Fed speakers throughout the week reinforce that additional tightening remains possible, markets would likely begin repricing higher interest rate probabilities. Higher bond yields, stronger dollar would increase pressure on technology stocks while reducing investor appetite for speculative assets like crypto. And of course, weak bank earnings or cautious corporate guidances could also reinforce concerns that economic activity is beginning to slow more rapidly than expected. Another catalyst we need to be very mindful of could be any excessive dollar strength, which leads to FX volatility due to any yen interventions, as Japanese finance ministers try to tame yen from becoming too weak against the dollar. Finally, from a technical standpoint, obviously, of course, if crypto, well, let's just get into it. All right, let's take a look at the total cryptocurrency market cap. That is our, at least a portion of our fundamental report that we deliver to the private community members. Every single day, I hand type those reports out, deliver to our community members so that they're on top of their game. They're paying attention to what matters most. No outrageous, unrealistic price predictions, in the loop with what matters the most in real time. So now let's get into the dark pools and the deltas. We're going to drop down to the daily chart on XRP. As I mentioned in the analysis over on Twitter, right now the last line in the sand for buyers is to defend at the $0.03799 dark pool. Going over the bearish thesis first, because right now sellers are in control, where over the weekend we defended at $1.16. Excuse me, over the weekend we defended at $1.11. Last week we defended at $1.16. We saw sellers trap buyers at $1.16750. They were able to defend at the $1.16 level, break through $1.11, and retest the $0.07943. Where over the weekend we saw some slight profit taking. Buyers tried to make a formal attempt to break back above $1.11. They failed miserably. They got trapped at $1.11, which is the most recent local high on XRP. Right now, we are trading below $1.07943, making our way down to that last line in the sand, which is the dark pool at $1.03799, where buyers will have a formal attempt to defend against their previous positions, trap sellers, and become aggressive and push price back to the upside. But for now, price below $1.07 and below $1.03799 opens the door for a drop down into that 91-cent dark pool. So on the bearish side, failure to break above $1.07943, reclaim that level would open the door for a retest of $1.07 and another bearish leg to the downside, breaking back below $1.03 and pushing price back down into the lower level dark pool at 91 cents, where we haven't seen XRP's price trade at since all the way back in November 2024. Another bearish scenario, of course, would be that if buyers do not try to make a formal attempt to defend against the sell volume that we're currently seeing in the market at $1.03, and instead sellers break straight through the current low and the leverage that exists at $1.03799, which would materially result in a possible retest of $1.03799 and a drop and a nice squeeze straight down into anywhere between 98 to 91 cents. Anything below 91 cents in an extreme risk-off environment, we do have the second bearish targets on our radar of about 68 cents on XRP if that 91-cent threshold cannot act as a support, trapping sellers and pushing price back to the upside. A material break below 91 cents, a retest, turning 91 cents into a resistance would open the door for a nice squeeze down into 68 cents as our overarching bearish target. To the upside, because I always like to give you guys some optimism, but I also like to keep it very real with you all. Sellers are in control until we see price trade bullish back above $1.16. We're on the daily chart, so we would need to see buyers turn $1.16 back into support. That would also coexist with breaking above the 50-day moving average, turning that into support, trapping sellers, becoming aggressive, and then we could see the possibility of a much formal recovery on XRP, trading back up into anywhere between $1.29 to $1.36 as our most immediate upside targets. This is a very far stretch away from where we're currently trading at now, and as you guys can see, right now market sentiment favors sellers. With that in mind, that would be bearish scenario number one. Bearish scenario number two could be a nice drop down into $1.03799, possible wick beneath these lows, taking out some of the leverage, and then seeing buyers trap sellers, become aggressive, and push price back to the upside. In that scenario, we would still, again, need to see $1.16 break, hold as support before we get excited of any higher prices on XRP. So as long right now as price is trading below $1.16, I'd say that, in my personal opinion, price favors a downside move into lower level targets, whether it's a revisitation of $1.03799 or a break beneath that, which I personally think is on the cards. I'm personally expecting it and would love for that to happen because I would buy a crap ton of XRP at these lower level dark pools if they are met. With that being said, those are right now the lower boundary targets and the upper boundary targets on XRP. As always, I do like to flash the higher level sell dark pools just in case. We do break above $1.29 and $1.36 in an extreme optimistic environment, which is highly unlikely at time of recording. But to the upside on our radar if that were to come into fruition. $1.57 to $1.77 is on our radar. Hopefully, you guys have enjoyed these thorough and level headed breakdowns. No hopium, no hype. We've been keeping you guys in the loop with XRP's price action all year, accurately, in real time. No outrageous, no overhyped price predictions or price analytics, no retail metrics on our charts, just institutional dark pools and delta zones. If you guys want access to these updated levels, because they are updated every other day, every third day, head over to CYPRXtrading.com. We'd love to have you on the team. You guys also get full access to these detailistic fundamental reports that we hand type out for our community members every single day, rolling into the Asia and London session trading hours upon a new daily candlestick open. We'd love to have you on the team. Hopefully, we'll see you all on the inside. And if not, at a minimum, do us that favor, smash that thumbs up button, subscribe to the platform. We do appreciate the love and the support. With that being said, I'll see you guys in a few days, giving you all a brief update after we see the core CPI and PPI come out later this week, Tuesday and Wednesday. See you guys in the next video breakdown.